For the purposes of this first exercise, freedom of movement, I'm going to skip the interview. In your assessment, you'll actually have to do the interview and set up from scratch. Clicking on skip interview, I'm going to call this freedom of movement, take 2. You also have a street address there of 245 Waterdale Road, Heidelberg. That's fine. Click on next. It's an individual tax return. Select that. Make sure that we are in July. That should be defaulted. And we are a service business. Right, we're now going to save that. Let's click on save. Okay, and the next thing that we want to do is we're going to create our account called bank. So we go to list chart of accounts. We could also go over to here and click chart of accounts as well. That's the same way. We're going to create the account called Eastpac Bank. You see there we've actually got 3 accounts there, one called Cash at Bank 1, Cash at Bank 2, Cash at Bank 3. Right, so we're going to actually go click on account, click on new, and it's going to be a bank account. Alright, that tells Reckon that this is an asset, a current asset, that is a bank account. So we'll continue, and we're going to call this Eastpac Bank. Alright, and we can save and close. The next thing that we want to do is also create an equity account. So new equity. We're going to call this one Capital. And save and close. And have that one done there. So in the chart of accounts that we've got there, we go to our Eastpac account. Right, up on there. What we're going to do here is we're going to double click in here. What we're actually going to do in this particular situation is record the deposit by one of our owners called Bethany Free. So we'll just do this on the date of the 1st of November. So we'll just change the date here, go back to November, 1st of November, and the account will be Bethany Free. Press tab. Because she's not in the name list, we're going to fast add her in. And because she is one of our owners, she's not a supplier, customer, or employee, she's an other. And what we've actually done here is she has deposited $15,000 into the account. And basically that just tells us what the deposit is, but where are we going to put it to, what account? And that was with our capital account that we had just created. And there it is, it's in there. Right, we can click record. Alright, so you can see that's now recorded and it has a balance there. So if I close this out and go up to my reports, company financial, down to my balance sheet, you can see now that it is our 15,000, okay, and our capital 15,000. So closing that down there. So that does that first part of setting up the account or putting in the owner's capital. So the second transaction that we want to do is Bethany buys equipment for treating patients costing $2,000 plus GST for cash. So this is a purchase of a fixed asset for cash, and this is the way how we deal with this. So we're going to double click on Eastpac Bank because we bought it for cash, and we're going to change the date to the 2nd of November. So we look at the top line, because it was for cash, the payee, which was sitting up there, we're going to change that to cash, press tab, fast add in. Okay. This too is also listed as an other because they're definitely not suppliers, customers, or employees. Right, and what we've done is we paid $2,200 for this particular piece of fixed asset, their furniture, or actually called equipment. So in the account field, we're going to look for equipment. So I'm going to start typing this in. Pressing tab. Okay, it's not on the account list. We're going to set it up. Now, equipment is not an expense. It's actually a part of our fixed assets. Save and close. Now, it's at this stage here, because that $2,200 cash also not included the equipment, it also included the GST. Click on the splits. Click on there, and we already have the $2,000. Now, actually, of that 2,200, 2,000 was equipment, and tax payable was the other 200. There it is there. And we click on record. I'll close first, then record. Okay, so we close the chart of accounts there, go up to our reports, the financial down the balance sheet. You now see that now being recorded. The next transaction, what we want to do is where Bethany buys the treatment couch on credit. So this is a fixed asset on credit. So what we want to do is we want to create a new account. And it's going to be in the fixed assets. So it's going to be a fixed asset. Continue. And we're going to call this treatment couch. Always making sure before you click on save and close that the treatment couch is a fixed asset. And making sure that it is there. You've got it all correct. Click on save and close. We also want to create another account called sundry creditor as an accounts payable. So we go account new, and we want it's in the other types, and it's an accounts payable, and we're calling that sundry creditor. And that's just an accounts payable. So once we've created those two accounts, we're going to go back into the chart of accounts, double click on the sundry creditor because this is the account where we're actually buying the fixed asset from. And this is all actually going to be on the date of the 3rd, so just change that to the 3rd. And the supplier is going to be medical equipment supplies. Okay, it's not in the supply list. We're going to fast add them in. This is so we just don't have to put their phone numbers and their email addresses and their actual physical addresses as well. We can always do that a little bit later. So what we've done here is we've set them in there. We're actually going to be billed for 2,200. So this is like receiving our invoice. Okay, and in the account, we're going to have, this is our treatment couch. This is the fixed asset we just had created before. Right, so once we're there, we then go down to our splits because that 2,200 includes some GST. Right, so we'll just change the treatment couch to $2,000. And this imaginary line down here, and this is our tax payable. And that will be 200 there. Close, record. Yes. Okay, so that then records that 2,200. Now what we're going to do is we're actually going to pay now 1,100 of that bill. So we're just going to close, and we're going to go to our bank account, Eastpac Bank. We're going to key in the date, the 3rd, the date's there already. Okay, we're going to enter in ATM. and the number type there. And then the payee, okay, we're going to write medical equipment supplies. They should be there because we've entered them in before. Okay, so the treatment couch is going to be for 1,000, and this is going to be the tax payable is 100. Okay, and pressing tab, and you're seeing that the payment now is adjusting there correctly. So if we click on close and then record, okay, that's been done. Now if we go up to our reports, we have a look at company and financial, looking at the balance sheet, it's now coming through there, recording those particular ones. So what we've done is we've first set up the capital coming into the business, then we recorded the fixed asset being paid for by cash, and then purchasing another fixed asset using credit, and then doing a part payment of that one. The next part of the exercise is looking that there are 4 transactions on November 4. One is paid rent for 1 month to Easy Living Retirement Village for $1,200 plus GST. The second transaction of withdrawing $400 for the personal use for the owners. The third one is advertising leaflets were printed, so we need to pay quick copy $250 plus GST. And the fourth transaction is treating 5 patients at $50 each plus GST, and that was for cash. So let's deal with the first one, which was paying rent to the Easy Living Retirement Village. So what we need to do is go to our chart of accounts. Mine's already up there, right? And we're going to double click on the Eastpac Bank. And we're just going to adjust the date now to the day that it occurred, which is on the 4th. Right, and what we're going to, in the account field, we're actually going to, who we're actually paying, which is Easy Living Retirement Village. Okay, we're going to fast add that. We've had a bit of practice with that particular one, and we're going to click that one as an other name there. Now, in the payment column, okay, because we're paying them, we're actually going to pay them $1,320. Now, the question says that we pay $1,200 plus GST, so working your 120 onto that, that gives you your $1,320. So on the second line, okay, this is going to be attributed to rent. So just find out my rent. There it is there, making sure it is the expense account. Right, and now we're going to go to our splits because there is GST attributed to that. Okay, we'll just rent to 1,200, and we want tax payable, and it's 120, and that balances us out, and close and record. Okay, so that one's done. So that deals with the first one of paying rent. And that was very similar to how we paid for a fixed asset just before. So the next transaction, well actually the question is asking you to have a look at the profit and loss statement at the moment. So we go up into reports and we look at the profit and loss, and we'll just look at the standard one. Right, we'll just maximize that screen up there. Okay, we'll just adjust our dates, go back to there, and we'll just change it to end of November. Right, and we should be able to refresh that. And now you're seeing a 1,200 net income there. Right, so that's right there. Okay, minimize that back there. Right, so our next transaction is where we're going to withdraw $400 for the owner's personal use. So this would be looking at our drawings. So back in, we're still in the Eastpac Bank. That's good. We're still in on the same date. Okay, what we're going to put in here, we're going to type in cash. Okay, we've used cash before. $400 in the payment column. the account that is being affected would be our drawings. There it is. There's our drawings. Audio, and we're going to press tab. Let's just have a look. Just get rid of this. I'm just going to type in drawings. Okay, it's going to use this partner's drawings, that's fine. I'm going to click on yep, okay, click on record. Okay, that's been done there. And coming back here, we're going to also do another transaction on the 4th, and this is going to be quick copy. Okay, we're going to fast add them in. Audio, they're going to be other. Right, and this is in the payment. We're going to put $275 in there. This is for advertising. It's advertising. It's an expense. Okay. Now this will also have GST attributed to it, so click on the splits. Okay, so we've got our splits in there, working out what our GST would be, and look at that, it was 250, so just change it to 250, and then come down to a new line, and this is going to be a tax payable, and there's a 25, making sure that payment is still there at 275. Click on close, and then click on record. Right, so there we have now put in our advertising. Our last transaction on this particular day is now going to be our 5 patients at $50 each plus GST. Okay, so what we need to do just before we enter in those cash sales from those customers is we're going to go into our edit preferences, and we're going to go to the company preferences and just make sure that the use undeposited funds as a default deposit to account is unchecked. So just ensuring that, removing the tick, then click on OK. Right, so now we're going to go customers. Okay, so we click on customers, and we're going to go enter sales receipts. I'm just going to click on no, we've got a card there. Okay, let's change the date. The date is there on the 4th, that's good. Okay, and in the item column, okay, what we're going to do is we're going to key in consultations. Okay. Okay, so we're going to accept service as the type. So key in the consulting treatment in the description box. So we're just going to put in consulting and treatment. What this is effectively doing is it's just setting up what we're actually receiving the money for, and it gives us a bit of an idea of what that does there. We're going to say that our rate is $50. Okay, and in the tax code we're going to select the GST 10%, there it is there, right, and key in fees earned in the account box. fees earned. Okay, in the account balance not earned. Save and close. Right, just making sure. Okay, what we've got here is it's a service. That's what the service is, the consulting treatment. It's a rate of $50. Okay, it includes GST, and it's going to the account called fees earned. Click on OK. Right here. When the sales receipt returns, key in 10 in the quantity. Right, you'll see now that's been adjusted to $500. Right, so we're looking at the next part of the transaction. And before we click on Save and Close, we want to make sure that we're putting this $550 to the correct account, and we want that going directly into our Eastpak bank account. So selecting that, and then we can click Save and Close. Now what we should have is we go back into Reports and go into Company and Financial. If we look at our balance sheet, we should be able to see our bank account has gone up by another $550. Looking all the way through there.